This is Trend Following Radio, where great thinking comes alive. Nobel Prize winners, legendary traders, best-selling authors, and the pros that know what drive us irrational human beings. I am your host, Michael Covel. Not filtered, raw, honest. That's my passion. Today on the podcast, I have Jon Boorman. Jon is a CMT, a market technician, trader, 25 years of experience in global equity, FOREX, futures markets. Been with a lot of the big investment banks. So he kind of comes from the inside, and now he's worked his way back to being just Jon now. So he's not associated with any big firm, doing his own thing, helping clients now outside of the big infrastructure. An interesting conversation. I hope you enjoy it.
Hey, Mike, how are you?
Good. How are you?
Very good.
That was weird. I didn't think we had even answered. I just all of a sudden heard you. I was startled. Really proficient technology over here in Southeast Asia, huh?
That's good. It sounds good.
You sound awesome. You sound like FM radio. We're 8,000 miles away. I love it.
That's great. I mean, I'll warn you, if I suddenly have my yard guys, I might get some background noise, but we'll see what happens.
What accent am I detecting there?
Well, most people think I'm Australian, and I'm not. I'm British. I moved over from England to the States about 8 years ago.
Gotcha.
And I think somehow I've developed this transatlantic thing that people then, hang on, I know you're not from here, and I know you're picking up different things, but yes, still a Brit.
Well, years ago, I lived in London, so I never reached for Australian accent first. I always reach for British first. So at least if I'm guessing.
Yeah.
So I have to ask. We'll jump right in. So you were inside large investment bank brokerage firm for a long while.
Yeah. Well, I mean, I've been in financial industry since '87. I kind of trod a fairly traditional route for a trader in the UK at that time. I started in settlements and worked my way up and started working as an assistant to a portfolio manager after that, and just showed a particular aptitude for trading and interest in the markets, and eventually got up into the trading room there. And that was at Schroders. Huge asset manager in the UK. And I was handling all their Asian business at the age of 22. I mean, it was ridiculous. When I look back, I just think the responsibility afforded to someone so young. But they were very good at bringing people up through the ranks like that. And it taught me a lot, and eventually helped me get a job as a head of a desk at what was then Kemper and later became Scudder. So I'd always had that institutional background working for PMs, and then eventually went to the sell side in 99 when I joined Lehman. Mm-hmm. And was a sales trader there, and then a prop trader until they let me go in 04, and then I left London in 05 to move to Charlotte, North Carolina.
Well, one of the things that I talk about, I never worked for an investment bank, or a brokerage firm of any sort, or a hedge fund. But one of the things I do talk about, at least based on my experience, my research, my homework, it seems like quite a few people have made it into trading being on the very outside. And I'm curious, given to when you started, how young you got started, if you were advising someone today, would you say, hey, you're going to have the chance to realistically go through the same experiences I did? Or would you make the argument that perhaps the landscape has changed so dramatically and all the tools are at your disposal now, and it really comes down to, hey, can you Can you trade either for your own account, or do you have friends and family, or do you want to start a fund? But maybe some of the training ground that you went through, and you might disagree with me, some of that training ground might not be an opportunity today, or maybe is not relevant today.
Yeah, I think that that kind of infrastructure and the thing that I went through, I think that's, I don't know if it doesn't exist anymore in terms of how they bring people up through the ranks, but I think it's a lot harder. You talking about that makes me realize that in some respects, even if we didn't realize at the time, people like myself were given incredible opportunities back then. And don't forget, it's also it's the era that we were in, the financial industry. I mean, I started in 87. And despite the crash, the whole industry had just been going through an incredible growth and an amazing bull market throughout the 90s as well. So it was, even though the market is still very strong right now, that the feeling for the industry couldn't be more different than what it was back then. So I think in that regard, there's perhaps less opportunity, but where it's better for everyone these days is that there is so much you can do individually by yourself with the technology that's available. I mean, it's just incredible, whether it's charting software or using tools like StockTwits, Twitter, anything on social media where you can instantly integrate with a community of traders and get an incredible amount of information. I mean, there's almost too much information. Sometimes you have to have a pretty good noise filter. But
let me interject there to kind of give you a defense on something too, that because there might be some people out there thinking, well, John, he had this unique access point and to break in with the large investment bank, and that's why he's where he is today. Whereas I'm sure, and you don't have to name names, but I'm sure there's plenty of people that you worked with that had similar access, opportunity, et cetera, and they're not doing what you do today. So I just want to make sure people understand that it ultimately comes down to the individual.
Well, it does. I mean, it also comes down to having a passion for it. I mean, there's many people that I've worked alongside who they were great salesmen, great sales traders, but they have absolutely zero desire to ever be a trader or a portfolio manager for a living. And perhaps it's because they recognize they don't have the attributes necessary to do that. I don't just kind of lost my train of thought there, but I'm just.
Well, just the idea. I want to make sure that people aren't sitting out there, because as I bring up this issue about being with an investment bank, and that some people immediately think, oh, well, I just can't do it. And I'm just kind of saying, well, hold on. I'm sure you, John, had plenty of peers who, have not stuck with it. And it often, and like I said, it comes down to the individual.
Yeah, it does. And there are many that they've, as the industry itself has gone through some decline despite what the market's doing, they've moved on to other endeavors. It was something I've always had a passion for ever since. It was actually from doing something at college, and it's when I was, I think I must have been 16 or 17, and there was a hypothetical portfolio that you got to manage and see who could make the most money. And in that roaring bull market, made like 100% in 6 months or something ridiculous. And it was like, wow, this is good. It actually probably wasn't a good thing because it makes you think this is easy. And just took a further interest in it. And then later in being a technical analyst as well, just from that was from being on an institutional desk. And when portfolio managers would give you an order, I wasn't one of these traders who would then just call someone up and here you go, here's the order. I felt, you're giving me the discretion to do this. I need to look at the context of where are we intraday? Where is this stock on a year? Start looking at the at its chart, and you just basically get a backdrop, a context, and then I just slowly used to develop things from there. So largely, like a lot of technical analysts, almost self-taught initially.
Let me jump into something. I think it was spring of 2012. I gave a presentation in New York City to the Market Technicians Association, and I asked for a show of hands for those in the room that were familiar with price-based trend following. Now, here I am in a room full of guys that have got probably a ton of, quote, technical analysis training. And the amount of hands that went up in a room of, 400 or so odd people was like almost non-existent. And that threw me for a loop. So, and I know you are comfortable with the word trend and comfortable with the word following and however many different ways you might describe it too. But I would, maybe you can comment on that idea that maybe so many people get lost in some of the technical analysis that's pushed out there, which is the reading the tea leaves and all kinds of funky stuff. But the reality, I still think, is that the evidence shows those practitioners that have made money as technical analysts, the big money over the many decades, has been the very straightforward price-based trend following and not any of the stuff that we all kind of, I think when we're first, anybody's first indoctrinated to technical analysis, often they first pick up that book that's talking about, well, if this kind of pattern happens, then this will happen. And I almost call it like fundamental analysis for technical analysts. Did you see where I'm going with that? I mean, so just the idea at the association that there were so few people that understood trend following. And I really want you just to kind of run with the idea of, given to when your career started, when did you first have that aha moment of like, ooh, this trend following idea is quite interesting. Aha.
Well, I mean, trend following specifically, that was really after I moved to the States. I kind of got into that relatively late. So I guess this is like 8 years ago, maybe. And it was going to a Van Tharp course, because he's actually nearby here in Raleigh, North Carolina. And having read one of his books, and it made me deconstruct everything I thought I knew. I read a ton of books, and yours too, and it made me realize that this is what I believed in. This suited me. I've always maintained, as Van Tharp does, that you need to find a system that suits you, suits your personality, your trading style. And the more I read about trend following, the more it made sense to me. It was logical. It didn't require any other knowledge. And the key about that is it was, so many people look for complexity, and complexity seems to sell for some reason. I've never understood why people can't accept that something is, it's not that it's easy, but it's simple. It only needs to be simple. And I think they almost see it that if people can make money by simple means, it somehow makes them feel, it can't be that easy. It makes them feel stupid.
Let me ask you though, because you make an interesting point. So when you say simple, I agree. The actual, if you have to write something down, is fairly simple. But I've been working on a project where I'm trying to better explain all this to people. And I think the big picture of why it works and how it works and the philosophical, the psychological, that might not be so simple. I mean, I think you're right. The actual engineering, like here is the cart. You can see the engineering of the cart. You can put the wheels on it. That's fairly straightforward. But I think a lot of it is fairly dense. Otherwise, there'd be more people embracing this. We're out in the wilderness still, aren't we?
Well, that's true, because and that's why I say it's simple, but it's not easy, because the bit that isn't easy is actually executing it. And that is the key thing. Most of the time when I'm writing on my blog, a lot of the posts, there isn't much to really tell people about, identifying a trend, getting in, getting out. In some respects, that's the simple part. The hard part really is having the discipline to stay with things, to ignore the noise, to stay with those trends. That is the hardest part. And perhaps that's something that you can't necessarily teach, but you have to experience the benefit of it, to then truly understand it and know that it works for you. And that can take time.
Let me ask you a question about something you brought up with Van Tharp, but I know Jack Schwager has said the same thing, and I'm not trying to pick a fight. Oh, come on. Yes, I am trying to pick a fight. No, I mean, here's my thing. I've looked at so many disclosure documents over the years, so much performance data, trend following performance data. And what's so cool about it is you can look at all this data and you can run some correlation tests and you're like, oh, wow, these guys might have slightly different rules, but they're all generally doing the same thing. And when the big moves happen, they make money in the same months and they lose money in the same months. On average, you pretty much can see that. And you can see all these practitioners from different walks of life that have kind of grown up and kind of got at the same place somehow or another. I just always wonder, though, when I hear the idea about trading your own personality, it makes me think that there's a whole slew of strategies out there that have equal evidence, like trend following in my world. And I don't know that that evidence really exists. So sometimes I feel like, well, what are these strategies? Like, I don't really think there's like all these strategies that people can just embrace, that or at least there's not the evidence in the professional world, I think, that you can hang your hat on. Do you see where I'm going with that?
Well, yeah, but then I would say what makes any system or any methodology successful? When you look at all the most successful traders, and even if you go through all the market wizard books, all
trend followers.
Well,
a lot of them.
A lot of them, but there are also. Well, then let's use the example then of just anyone who's a very successful fundamental manager, hedge fund manager. They might have a totally different methodology, but they can produce similarly very strong returns. And what are the things most of these people have in common? It's always the classic things of risk management and position sizing. Mm. And that was one of the things that's really what came out to me from the Van Tharp thing, that it was deconstructing a system and what's the variable part of each system, and that entry is a lot less important than people make it out to be. It's not. It's people just put too much emphasis on finding entries, and entries don't determine whether you take a profit or loss on a trade. Exits do. Only exits determine whether something makes money or not, and position sizing determines by how much.
Well, I think you make a good point there, and I just want to add, because as I bring up Jack and Van, they definitely are huge proponents of risk management, loss taking. And I don't want to confuse anybody out there those guys are right there, same headspace that you and I are.
Yeah. And so it just made me think, okay, well, so in some respects, I can respect people who have different methodologies to mine and do just as well, because what do we have in common? We probably have risk management and position sizing things in common. And so it makes you, it's not diminishing the importance of trend following or anything else, but that's where it made me realize, well, that's what suits me. That's just that's my mechanism for trading. Mm. But the other parts of it is what really makes a huge difference. And I mean, one more thing on the Van Tharp thing. That's why he does this marble game in one of his courses. And I was sitting there years ago doing that in this room. And what it really teaches you, it's like a bag of marbles with different R multiples in there. And everyone in the room has a hypothetical 100,000, and all you get to decide, you get told what the positive expectancy is of the system, and you just get to decide the position size. And then one by one, we pull them out. You decide how much you're going to bet each one. And then at the end of the session, we see who's got what. And there were like a dozen guys in the room. 2 went bankrupt. 2 made about 30-40%. And most were around small up, small down.
Yeah.
So that, it's like, what does that tell you? Well, that tells you the one big variable there was their bet size. That some people traded a winning system and turned it into a loser.
Yeah, I guess the maybe the larger point is you kind of work through it and kind of bounce off me is if you're using a trend following system, it seems like loss taking and risk management makes a lot more sense in the context of momentum style trading. Whereas if you're a fundamental analyst, once you make your decision about, hey, I want to get into this, or you're looking at it from a value perspective, it's all about not taking a loss. It's all about averaging losers or coming the way down. So it's like, in some ways, I have a hard time understanding how a true fundamental guy, even though I know Warren Buffett in the Kelly criteria book and all that kind of stuff's been discussed, but it just seems like momentum style makes a lot more sense for those that want to have a strict loss taking system and want to have really concrete risk management.
Yeah, and I agree with that. I can see that. I'm always saying to people the real thing about technicals is that they can just help minimize your losses. That they'll get you out of something much quicker. Craig Johnson, who is the chief technical strategist at Piper Jaffray, he's a CFA and a CMT. And
I don't have any letters. I want some letters.
And he had a great quote that said his CFA helped him get his job, his CMT helped him keep his job. and that is I love that, because that's so true about how the industry is, or how the industry perceives the worth of fundamentals and technicals as well. And after every bear market, suddenly everyone loves technicians because they could have saved you from here. This is where it was then in a downtrend. You could have got out.
As you're talking about that, what do you make of that little example I gave? I know it's a small little sample size, but the whole idea of just kind of asking for a show of hands at a room full of CMTs and price-based trend following was literally didn't seem to be on the radar of almost anybody.
Yeah, well, I think that's because they're probably more into trend predicting, not trend following. There's a big difference. And that's, again, it comes down to that's what sells. Everyone wants to be the guy who made the call. The top is in. You're seeing it so much this year. I've written a lot about this on my blog. It just drives me crazy, the amount of people that call for a top.
With a technical analysis viewpoint, you're saying they're calling for a top.
Well, both technical and fundamental, but yeah, there's plenty out there, technical who do it as well. I mean, it's fair. Everyone has their different methodologies and things, but to me, it's much, much simpler to just, stay with the trend. It's like you just look at that. Does this look like this is, rolling over yet? No, not to me. But what really gets me is you feel like they should know better. Like it's almost irresponsible to be telling your clients to take money out when there's no evidence yet of it. If there's truly going to be a bear market or a major downtrend, you're going to get plenty of notice. You can look at any trend following model through 07 and 08, and you got plenty of notice before that truly turned into the incredible move it was. Don't
you think what's really happening there, though, is that they just want this perfection of the exact tops and the exact bottoms, and they work under this fantasy that they're gonna call these tops and call these bottoms.
Yeah, they do. And then what irks me is that then they're called brave for making a call like that. And it's not brave, it's foolish. And I get it. You can say you have all these reasons. You're concerned about margins in Europe and China and all these different things. But, there's a solution for them. I mean, don't most brokers or analysts, I used to be one, that what they really want is to be able to call it both ways so that no matter what happens, they can say they were right and look good for their clients. Well, then what they should do is they should say, here are all the reasons we're bearish, but the market continues to make all-time highs. So until price confirms, you should stay long. There you go. Wouldn't that be much better than whatever happens, they can look good?
Well, look, I look at this. I don't watch CNBC on any kind of regular basis. I pop it on once in a blue moon just to kind of watch things move around on the screen in happy colors and stuff. But if they talk about technical analysis, is usually a guy coming on, he puts a chart up and he starts talking about some kind of pattern, and he starts making a prediction. And then when they have David Harding on, they start asking him all kinds of questions about what he thinks is going to happen tomorrow. And it's I just, even after all these years of being in the middle of this trend following world, I'm still just amazed that the major media outlets don't give it any kind of a shake. And I can only assume they don't give it a shake because they know exactly what it is, and they know if they give it too much of a shake, they're out of a job.
Yeah, it's like a trend follower doesn't make for good copy, does he? Because what's he going to say? What are your top picks? Well, Maria, they're all as good as each other. I don't know yet. It could be a loser. It could be a winner. I treat them all the same. Where do you think the market's going to be? I have no idea. What's your price target? I don't have them.
And the thing is you don't get the chance to explain, because what they want is the whole dynamic on TV is framed to give them picks and directions. It's not framed to kind of discuss a philosophy and get people to more of the core of what you really do.
And that gets back to what I said about the emphasis that's put on entries. Because that's exactly all that is. It's like, what should I buy? What would you put your new money into? It's never about where's your stop. No one's ever been asked on CNBC, where's your stop? Where are you wrong? What's your track record?
Isn't that amazing? It's amazing. It only takes about literally a couple minutes of Google searches to find out that there is this kind of underground network, as I've described them, of trend following traders. It only takes a few minutes. So at some stage of the game, one has to start to, if they're awake, they have to start to come up with a theory about why major media sources and major brokerage firms don't discuss this world that you and I know about.
Yeah, and there is, some people will get some information, get their information from there, and it might be their source of breaking news, if you can call it that. Whether it's actionable or not is a totally different matter. It may be informative, it may be entertaining. It depends on your definition of it, but you can't form a system on it. I'm pretty sure of that, because there's so much of what's required for any trading methodology missing from it. Like I said, there's no stop. There's no position size. There's nothing.
One of the points you made to me in email, you said it was ingrained in you at Lehman Brothers, which was the idea of no longer having a need to be right. Tell me your story behind that.
Well, having left there made me then feel that way. Yeah, when you're at a broker, you have there is definitely a need to be right, because it's something about having a view. Well, first, always having to have a view. I cannot tell you what a relief it was, and no longer being at a broker, to no longer have to have a view. And I hadn't realized it until until, I was then out on my own. And maybe that's just because I was very conscientious about it, but I always felt I'm on record for everything I say. So if I tell this guy, I think this, I think that, I'm then worrying about that for the next day and next week, so that when he comes back, we can talk about it. The thing about being right, it was, as a prop trader there, it's like, I give you two examples. And I'm not saying this happened, but I've kind of seen things like this. If you could have two prop traders who had the exact same end year P&L, but one only won 40% of the time, one won 70 or 80. And the perception of how they did will be very, very different. Because the guy who was right more often, but then had that one huge or few huge losers, will be seen as someone who others can benefit from their opinion because they have a track record of very high accuracy. And again, it's not concentrating on the things that really matter about position sizing and exits. Whereas the guy who had a whole string of losers and lost more often than he won, but ended up with the same P&L, he'd be perceived as just having got lucky on a couple of trades, but being, dreadful because he had so many losers. It just makes you realize the mindset there. It's about accuracy. And I should give the quick example, and I'll let you run with this too, is that, we're talking about this idea of not being right. And if somebody is completely unfamiliar with what we're talking about, this style of trading, they might hear, well, gosh, of course you want to be right. What do you mean you don't want to be right? Okay, here's a really simple example. You are a high-powered venture capital firm in Silicon Valley. You have 20 opportunities in front of you, 20 that you hope to be the next Facebooks. But guess what? Everyone in Silicon Valley has learned you can't predict the next Facebook. So what you do is you fund 20 upstarts, 20 next Facebooks. You fund 20 of them. 19 of them are going to lose you money. They're going to be losses. Yeah. And then the one of them is going to make you money and pay for the losses. That is what you mean about the right part. Yeah. And I've seen, there's another area I've thought of where this came through. I saw this happen as well, and this is an area that not a lot of people know about. But there's a thing called alpha capture that some hedge funds have. These alpha capture platforms, and it's a means for them to collate and measure the ideas that they get from brokers. And they then rank the brokers, and the better you do, you get a payment for it. And there is a part of that I absolutely loved, that because it is such a meritocracy, and it makes the truly good traders shine. And this is something I was introduced to at Lehman years ago, and I did again recently with a local broker here. And what I found was, when I'm entering my ideas into this, rather than doing what I would do if I were managing money, you end up doing what you think would work best for how they are measuring you. You almost try to reverse engineer it. And I've sat down with one of them and said to them, look, this is what I really want to do, but it would mean I only win this percentage of the time instead of this. And that's of less use to them, because then it becomes harder for them to allocate funds to my ideas, because they have no idea of knowing which one's going to be a winner.
It's a vicious circle, because basically it's a big CYA program. And, the Cover Ya AS program. And I think, you see that also with some of the large trend following funds. that I think a lot of them say, hey, look, because I mean, look, when I use these examples of these trend following traders, it's not because I'm kind of working to promote them necessarily. They're just great examples of the style. However, there's been many examples of trend following traders who have, frankly, bastardized their approach by trying to appeal to the very allocators that give them money. Now you might say, why would they do that? My friend, if you have $1 billion under management and you're being paid 2 and 20, some people will do anything.
Yeah, no, I can definitely see that. And it's, you know, that whole thing of, I've often felt, I mean, that alpha capture thing and even stuff as a broker, you often feel you're telling people what you think they want to hear rather than what you think they should hear. And, you know, that's why, I mean, I don't think I was any good as a broker because I was just too honest. I really, and I don't mean that as bad as that might sound. I just mean that I really had a view, and I sometimes felt, you know, I can't sell this stuff. I don't want to say this research. No, I don't agree with it. I always had to believe in what it was I was saying to someone. And sometimes I couldn't. I remember being at Lehman from 2000 onwards, and I was very, very bearish. I was convinced that was a major top that had happened, that we should be selling every rally that happens. And of course, you know, brokers never had sell notes on anything, and you'd be peddling this stuff that says buy this, buy that, and it's like, oh, really? You know, I just couldn't do it.
You know, one of the things we kind of talked about in notes too was just this, and we discussed it a little bit about in the beginning, which is the kind of, just say round, or a kind of a roundabout way that you were exposed to the financial industry and kind of have come around to this trend following way of thinking. Do you ever have conversations with people in your life that maybe they're fairly successful? It could be a doctor, attorney, who knows, engineer, whatever, an IT professional. Maybe they've had some success, they've got some money, and they want to know about what you're doing. And do you find yourself convincing converts, or do you find people wanting to just kind of stay wedded to their view? I mean, obviously you convince converts. Your blog is popular. People like what you have to say, so you're winning a following. But do you find sometimes, even in personal interactions, people just they either just can't accept it because it makes them feel like they've made mistakes for a long period of time, or I can't.
Well, there's a bit of that. I mean, that's kind of going back to the thing I'd said before, that some people don't want to accept things like that because then it makes them feel inferior, thinking, well, it can't be that, you know, simple, because then that makes them look stupid for not being able to do it. But I've explained to people what it is I'm doing and what it is I've discovered, and explaining why I think it works. And it definitely makes them look at things in a different way, because they've never heard that kind of angle before. They've never really heard the trend following side of the story. And I'm often trying to say to people, and via the blog as well, my reason for doing that and putting everything I do out there as well, all my trades, it's almost like I'm trying to say to people, look, you can do this. This is within your capability, and I'm going to demonstrate to you. And again, not that it's easy, but that you just need a simple approach. You need to lengthen your time frame, stick to what's important, ignore pretty much everything else you ever see and hear, stick to trends and price. And their converts, they say, yes, we love it, but we'd still want you to execute it for us, because they then understand that is the hardest bit. It's having the discipline to follow through. But when you tell them about the actual methodology of how and why you do that, yeah, people do accept it, and they'll readily admit they hadn't well, not that they hadn't heard of it, but they perhaps haven't seen it explained. It's because there's no one in the media ever talking about it. And again, it's maybe that whole thing of, if you told anyone that you only win 40% of the time, anyone who doesn't know any better would think, well, how can you make money? They have no concept of that. And once you understand it, once you explain it to them, I think they then kind of like that. They think, okay, I get it. That's actually, I'd be interested in doing that. But then they realize maybe they personally can't do it.
I have a theory on acceptance of the trend following world, at least a larger segment of the investing community accepting it. And I think if that ever happens, it's only going to be when, for example, the Fed can't do what they did in the fall of 1998. They can't do what they did in 2003 and can't do what they've done since 2009, meaning the markets at some point in time, if the markets can always just be levitated by the central planners to wherever they want them to be, and I'm not trying to make any kind of prediction necessarily, but I'm just saying from an acceptance standpoint, as long as people can see markets at all-time highs, even if they go through 4 or 5 years where it's just kind of up and down 50%, back up 100%, I think people really need to experience perhaps maybe what the Japanese have experienced, which is almost a permanent state of down equities. And maybe it's going to be a hard time for there ever being kind of a wider acceptance until that is broken, if it's ever broken.
Well, maybe it's a good thing. Maybe the way people totally embrace it is if things remain hard to explain, because then it will make them realize, well, maybe it doesn't matter that there isn't, why does there have to be a reason? Maybe we don't have to worry about the reason why, and it doesn't have to make sense. I'd actually welcome that, because that would then be their way of saying, okay, well, I will now just listen to price. That's telling me all I need to know. This guy's been wrong and this was wrong. If everyone else doing all these top callers and everything else are wrong often enough, people will then start to realize, okay, I've found something that works better than what these guys are doing.
Well, we know there's going to be a divergence too, because if there ever is that opportunity, there's always a divergence. Whenever there's down, very down equity times, you generally see a lot of the trend following traders trading more globally diversified portfolios doing well.
Yeah. I've had, and again, it may be, there may even be a divergence again with the whole fundamentals versus technicals thing. And I'm not someone who, takes sides and rails against fundamentals. I mean, maybe to a small extent, I use them in some screens I have, because I'm using, say, like something like an IBD list. If I've got two companies that come up on a screen and one happens to be something that would have come through the CanSlim method and the other is a company I've never heard of, well, I'm probably going to go with the one that I already know has a clear, strong growth and everything. So I use things like that indirectly, but I had someone the other day, I mean, being on social media, you get a fair share of people taking their shots at you. And
come on, what are you talking about? I've never had anyone take a shot at me.
And I had someone the other day who said to me, no fundamentals back this rally, none whatsoever. And, I kind
so
of
what?
brushed it aside.
Right?
I know.
So what?
It made me think, well, if no fundamentals back this rally, then what use are they? Because what you're basically saying is you've been kept out of, how far has this market gone? How long have you not been in? Then what use really is that? We've seen a similar thing with things like LinkedIn and Tesla and these other stocks that when companies are in the early stages of growth and everyone says, oh, well, I can't buy that because it's X hundred and something times earnings. Well, then maybe you need to change your model, because just because something doesn't fit into your model, it doesn't mean the company or the stock is wrong. Maybe it means your model is wrong. You're not accounting for things.
And look, it could turn out to be, and we saw this during the .com era, it could turn out to be that Tesla is never going to go anywhere. But you know what? It's real numbers that Tesla has gone up. That's real dollars that it's gone up. Whether or not in the long run it's still there, or Priceline or wherever, it doesn't make a hill of beans difference, does it? It's up.
No, absolutely not. And that's another example. I mean, because I'd had a signal on Tesla and we've been riding that and it's been great. And people would say, oh, just you wait, it's going to $50. And I'm kind of thinking, that's great. I hope it does.
It might, but it might not. And I don't know, but I'm going to keep going with the way it's going right now.
But but if it does, that's okay, because I probably would have got a sell signal and got short. Don't you get it? We can benefit from whether things go up or down.
Well, I think the admission there, though, that I think that maybe is hard for people to accept is that a trend following trader is really being agnostic. And yes. a trend following trader is not trying to tell you that 5 years from now Tesla is going to be the biggest auto manufacturer in the world. Not trying to tell you that. Simply saying with the game that we are looking at, the rules that we've been handed, the playing field that we can see, here is a way to make money. Now, so if you don't have your ego tied up in it and you just want to watch, you want to figure out a way to pull money from the markets, not predict whether or not Tesla is going to dominate the world, but if you just want to figure out a way to pull money from the markets, if that's what you're after, that trend following can help you.
Yeah, and that's one of the things that absolutely appealed to me. And it's like I said, no, and that goes back to the thing of not having to have a view, not having to have a reason why. Great, because I don't have that background. I have no desire to be a CFA, to go delving into a company's balance sheet. I realize that a stock and a company are two very different things. And the one can still be as good. The stock can move in all manner of ways. It's just like sentiment lagging price. Price is always going to be the thing that drives everything for me. I want to be going with where that engine's going. But
if people want to make a classical comparison, you can look at many futures markets. Maybe commodity futures. Some commodity futures markets have always had these parabolic up moves, down moves. And I think you're just seeing the same thing in equities. And once again, so what? Can you make money? Isn't that the objective?
Yeah, and absolutely. And and that's something else. People, they're concentrating too much on relative returns rather than absolute returns. And just that's something else I get a lot when people will look at your performance numbers and they'll say, well, this is all great, but did you beat the market? Because that's all that matters. Well, no, it's not. You can beat the market. People have demonstrated you could beat the market for however many of the last years, but somehow not have made money, obviously, because of the massive drawdowns in '08. It's not about that at all. And that's something else I try to teach people, that makes them, in conversation, makes them converts to trend following, understanding that you may not always get the full upswing of any uptrend, because we're going to be a little later into it, but you can certainly protect yourself on the downside, and you may even make money in the down years.
You brought up the drawdown thing, something that happened to me the other day, and I've watched over the years, the people that want to disagree with me, they used to be very vociferous, and now they try and do it, what I call is the I'm your friend approach. And so what they do is they come in, they're like, hi, Mike, I really like trend following. It's really, really cool. I really want to be a trend following trader. But you know what I'm having a hard time, Mike? Do you really, how can I get people to give me money to be a trend following trader when I show them examples like Bill Dunn having a drawdown? Thanks, Mike. I really like this. And so I had one of these guys the other day, and I responded. I said, okay, if you're looking for somebody that can tolerate drawdowns, I think you should just look for all the people that tolerated 2 minus 50% on the S&P, the people that tolerated a minus 77% on the Nikkei, and the people that tolerated a minus 77% on the NASDAQ. Find those people, and you could find your people that tolerated drawdowns.
Yeah.
Now, he didn't come back and play anymore because he realizes that's a big playing field of people that tolerate drawdowns.
I love that chart of Bill Dunn's returns, his performance. I used that recently in a post. I mean, it's just phenomenal. I mean, what an incredible track record over that period of time as well. You know, and that's one of the things that had always appealed to me as well. I mean, I don't pretend to have all the answers, but slowly, having been around the houses and seen many, many different portfolio managers and worked for different people, you kind of, you know, you get your own views on what makes sense to you, what would work for you. And then I've also, one of the big things was realizing that I needed to become or specialize in one area. I mean, I feel that because of all the different things I've done, I could easily have still been a jack of all trades, but that's not going to help you as a manager. Concentrate on one area, become an expert at it, make it that you become the go-to person for that discipline and that methodology. And obviously, you're not going to be alone, but I then looked at those others. All you're doing is standing on the shoulders of others, and you look at their records and you see what they've done, and you realize it's possible for you to try to achieve the same. And you look at those drawdowns. Could I tolerate them? Well, the only way you're going to tolerate them is because you have a system and a method that you built that you believe in. That's why you're going to do it. You treat every trade exactly the same. You never, I think, in one of your previous podcasts, I think Jerry Parker said something about being frequently wrong, but never confused about what I should do. And that's so true. Seeing something, I see that all the time when people are, they're kind of panicking or they're worried. What are you going to do here? What about this? What about that? Well, what are we going to do? We're going to stick to our system. You should never not know what you're going to do. And it's like the whole thing of coming out of a drawdown. You take the next trade and the trade after that and the trade after that.
You know, you as you bring up Jerry Parker and we were talking about Bill Dunn, one thing the audience should think about, or it might be a useful thing to think about, is that when you look at the track records of some of these long-term trend following traders, the legends, so to speak, like a Bill Dunn,
yeah,
and you go look at that chart, I don't think people necessarily consider that chart is after fees. So if you're looking at that chart and you're trying to say, hey, I want something to motivate me about what the opportunity could be. Right. So if you want something to, then you need to consider that Bill Dunn had to publish that chart after fees. So that means he made a slightly bit more money than what's actually advertised for his own retirement account, because he's not having to pay. He's not having to, there's no fees there.
Right.
So he's not having to take it out. So I mean, that's why I want people to always kind of look at this and say that the legendary guys are great for motivation. They're great to see what's come before and what perhaps you can do too. But just, keep your eyes wide open and really look at it from a detailed approach. There's a lot of motivation there.
No, absolutely. But people have, at the end of the day, I still come back to that thing that they can see the logic of it, and I can understand if they feel they're not able to do it, if they don't have the patience. I've sometimes, and I'm still wrestling with this for others, that maybe it's possible that people feel they don't have the, for want of a better phrase, the personality or the mental fortitude to be able to execute it themselves. And I'm not sure if that's something you can teach. And I think, like I said, it goes back to if you've actually lived through and built the system, that's when you would then have belief in it.
Well, you bring up another interesting issue, which I think is almost not related to trading even, which is kind of this passion and this entrepreneurial view. And I mean, there's plenty of people out there, put trading aside. I mean, there's a lot of people that just like the idea of standing behind the counter and serving Starbucks coffees all day long. That guy's probably not going to become a trend following trader either. He might. I'm not saying there's not going to be an outlier, but the reality is there is a certain amount of passion and kind of like entrepreneurial vigor that you have to have if you're going to be successful in anything in life. And trading is just one of those things. But if you don't have that, and you mentioned this early on in our podcast tonight, I guess morning for you, night for me, but you got to have that vigor, you got to have that oomph in you, right?
Yeah, no, you have. And hopefully, like we said, from looking at the track records of others and seeing what can be done, that's what gives it to you, because it then makes you want to think, well, how has he done that? I mean, that was one of the first things that appealed to me. This is interesting. This guy only wins 40% of the time, but look at his returns. How does he do that? And then it's like, okay, well, I would need to put up with this drawdown and this drawdown. But that patient approach and having discipline appealed to me, because I thought, well, I think I'm someone who's very capable of doing that. And I like the thing of ignoring noise and having context and sitting back and looking at the big picture. So, you've got to have a belief and a passion for it, and then you'll follow through on it. But it's a long, long journey.
Well, you might have picked a good spot. That's one of the quickest hours I've had in a long time. I enjoy that, John. Hey, listen, what's the best place for people to reach out and connect with you? I know Twitter, your website. Why don't you fill everybody in how they can find you and connect with you?
Sure. My blog, Alpha Capture, is jonboorman.com. I'm on Twitter at jboorman. People can email me too, jonboorman@gmail.com.
And that is JONBOORMAN.
Yes. Jonathan. Yes.
Well, don't say Jonathan. That'll confuse them. That'll type in something wrong.
JON.
JON. Well, listen, that was fun though. So I think we covered a lot of territory, and hopefully this gives people, maybe every time I have a conversation with someone, and I usually don't know what it is until after it's over, but there's always a different angle or a different perspective or something that reinforces the overall thrust where I'm trying to push this. And someone just brings something fresh and different, and that's what's so much fun about talking to everyone, is that it's just always that different perspective or a different cadence or a different voice,
sure.
Something that puts it out there in a different way. And like you said from the beginning, we were chatting in email, is that, maybe your take is it's coming kind of full circle from inside the big Wall Street shops to kind of all the way to where you're just John now.
It is. And it's just, it's going around all those different things, seeing other people do it, and you see successes and failures, and then you slowly realize what works, what doesn't, and this is what I should be doing. And I'm in my 40s, and then you suddenly think, well, if you're not doing it now, when are you going to do it? And I love that the markets will always be there. I always think of, it's never too late. Just start today, do something. That's what I'm trying to do. I'm kind of heartened by the fact where I see people talking about Julian Robertson starting his hedge fund when he was in his 40s, and other great hedge fund managers that today they're in their 60s and they've been going 20 years. And it's like, I've got plenty of time. With the markets, you've got nothing but time. They're always going to be there. So why not follow a strategy that helps you see that through all the way? And for me, trend following is the answer.
Works like a charm, John. We will talk again. I definitely want to have you on the podcast again in the future, and have a good morning. You're in Charlotte, right? So,
that's right.
Closing out from to Charlotte from Saigon, and we shall talk again soon, John.
Thank you. I loved it.
Take care.
Thanks. Bye.
I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash or just trying to make a lot of money, trend following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@covel.com. I will send you the right trend following steps to take along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you.